Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 1st, 2022. Yes, we're in the final month of 2022 and we're still kind of hanging out way undervalued at 16,000 or almost 17,000 Bitcoin. Still so undervalued, right? The whole cryptocurrency market is so undervalued, and any moment now, in my estimation, we're going to have a big change in price to the upside, okay? Now, indicative of that huge change is this: the US dollar currency index, okay? The DXY, the Dixie. And it is about to dump. Just like Bitcoin and crypto is about to pump, the DXY is about to dump. We're going to look exactly at how and why. It is on a neckline. It is right at support and around the point where it's going to break it. Okay, so I have an updated count of my DXY Elliott Wave analysis. We're also obviously going to look at Bitcoin, the rest of the cryptos. So if that interests you, then keep watching. Guys, hope you're having a great day. It's nice and sunny in the DC metro area. And it's Friday, right? It is Friday. All right, let's actually first get started with Bitcoin. Let's just have a peek as to what it's doing on the smaller time frames, okay? Let's go on the hourly time frame. And you can see that, as we discussed yesterday, we had this breakout right here. You know, we had this breakout of this descending wedge or falling wedge, or no, it's not a falling wedge. It's this triangle, okay? We had a breakout of this triangle. Really cool, awesome. What we got subsequent to that was a 1, 2, 3. Okay, for me, in Elliott Wave, any Elliottian, anybody who looks at price action, even if you don't know Elliott Wave, that's usually the form a corrective wave takes. 3 waves, 1, 2, 3. Okay, 3 waves or flavors of 3 is what you want to see in a corrective wave. And yes, this isn't completely straight, but in really bullish scenarios, you're going to see exactly this. What is this? You're going to see a running, we call it a running flat, but basically a B wave that extends beyond the starting point of the A wave, okay? Because that shows bullishness. And then a C wave that only goes to, it comes short of the bottom of this A wave, okay? That's what we call a running flat. So instead of something like this, don't be surprised to see stuff like that, okay? So this is what you typically see in really bullish markets, all right, when they correct. So I'm not surprised if this is the correction for that, and then we get a continuation from that. So that's the small time frame Bitcoin. My momentum indicator is nice and bottomed out, completely reset. Another really bullish indicator. Let's blow this up a bit. And you can see what I'm saying here is we went from all the way here and we went down just a little bit, okay? Represents a very, very short drawdown, okay? A short correction, and that was all that needed to reset the momentum indicator on the hourly time frame completely from overbought to oversold. That's very bullish, okay? That is very bullish. So that's what Bitcoin looks like. What we're going to do is we're going to get into the DXY analysis, and we're going to leave the more in-depth Bitcoin analysis and the watch list analysis for later on in the video. Okay? So let's just have a quick peek, and you can see pretty much the same thing throughout the market, right? You see Cardano putting in that type of flat correction, 3 waves, and then some sort of running flat, right? This is what I think is going on in the markets. You saw that in Polkadot right here, yeah? You go down the list, You see some version of that, right? Dodo. Looks a little different in Dodo. Ethereum is a little different as well, but you know, you could argue that this is some type of running flat. Don't see it in Zilliqa. Dogecoin. Yeah. I think I see it, but it's not running. Really, it's not a running flat. Maybe it is ever so slightly. Synthetics, Algorand, but you see what I mean. Okay. Now, let's get on with the DXY. This is really our market mover. I know a lot of people in our space are under the impression that we don't go up again until the Fed starts printing money, right? We don't go up again in crypto, in risk-on assets, until the U.S. government, and I guess other governments as well, start inflating the money supply again, because they associate the previous run-up in the markets with that monetary policy. But it's important to realize, if the dollar is really the world's reserve currency, and the dollar is really 6 out of 10, the dollar really represents about 60% of all the world's reserve monetary backing, okay? Then if the dollar goes up, then risk on assets go down, just because of this ratio right here, right? If every time I want to buy Bitcoin, I have to sell dollars, right? Then basically, as the dollar value, the value of a dollar goes up, the value of Bitcoin goes down. But as the value of the dollar goes down, the value of Bitcoin goes up. This is really important, okay? And to underline this, you don't take my word for it, right? We can we can see this in the charts. We don't have to sort of guess at this or kind of speculate. Here's a chart that I've shown before on the channel. It's very important. It is a monthly chart, and on top you can see Bitcoin's monthly sort of price action between 2014, I think, and present day. Okay, so every bar is a month, and on the bottom you can see the U.S. dollar currency index. Again, every bar is a month, also between the periods of 2014 and 2023. And what do you see? They're mirror images of one another, almost perfect mirror images of one another, and that underlines what I was just saying. Okay, this is about 8 years worth of data, really supporting the idea that as the dollar, US dollar currency index goes up, Bitcoin and risk on assets go down. At least Bitcoin goes down, right? That graph tells us Bitcoin. And then as the US dollar currency index goes up, down, Bitcoin goes up. And right now, the US dollar currency index is in a downtrend, and it's been in a downtrend ever since late September. And you wouldn't know it because, Bitcoin hasn't done, that much, but you're about to experience wave 3, in my estimation, wave 3, which is the largest, the most impulsive, the most acute of Elliott waves. That should show in Bitcoin's price action, okay? So that's where we're at with the DXY. Let's look more, okay? And I'm going to take a second here to make sure technically I'm okay. Yep, my stream is good. All right, let's get back into it. So just looking at the DXY, let's zoom out for a second. Actually, let's zoom out even more. Let's zoom out on the weekly time frame, okay? So for those of you who are not familiar with my work, I took the DXY's price action from 2011, around 2011, and I basically charted it using Elliott Wave analysis, and I was able to come up with this let's go on the monthly time frame so I can fit all of this in. I was able to come up with this this Elliott wave count and this impulse, which gives me 5 waves to the upside. Okay, so here I have cycle waves because cycle waves typically take years to form, and you can see that this 5-wave sequence went from 2011, March 2011, all the way until July or September of this year. Okay, so that is again a 10 plus year Elliott wave sequence. That's why it's in cycle waves. Okay, and I was counting this on the channel, the end of this 5-wave sequence, and indeed what happened since that count is we got a rejection from the top. Okay, another thing I did is, this is common for Elliotticians to do, I channeled the impulse. Okay, channeling the impulse is basically putting all of your Elliott wave impulse between support and resistance channel, which gives you a support and resistance for the entire movement. And so you can see there was support down here for wave 2, there was support down here again for wave 4, resistance up here for wave 3, resistance up here for wave 5. Okay, you do also notice that we have what's called a throw over in Elliott wave, which is a slight wicking above the resistance. Okay, you can also get a throw under, a slight wicking below the support. We didn't really get that here, but we do have some throw overs up there. Okay, so that did help us ascertain where the DXY was likely to reject. Okay, this channel, 10 plus year channel, let us know that it was likely that once we hit these levels of 111, 112, we were likely to get a rejection, and we did. Okay, so that's on the larger time frame. Okay, one thing before I go back into the smaller time frames, I want you to remember or notice this support line. This is going to come in handy. This is going to be important for the next bit of our analysis. So remember that this support line has been going since 2008, actually. Okay, it's been in place since 2008. It is actually a 13-year, 12 to 13-year support line, and it's very likely that we find support there one more time. Okay, so let's now go into the smaller time frames. Guys, if you're getting value, please like, share, and subscribe. So now I'm going to show you the weekly time frame. Okay, and you can see just a little bit more definition or detail in this count. I, of course, counted this wave 5, cycle wave 5. I took this and showed you the primary count. Basically, an extended cycle wave 5 with primaries wave 1, 2, 3, 4, and then an extended primary wave 5, which ends in this ending diagonal. It's, very common. Okay, and what's really important is right here. So I'm going to focus in right here because this is where I want to really show how I get this. Okay, so that's worth mentioning. So let's go on the daily time frame now, and as you can see, once we hit the top, the very top of this cycle wave 5, which is also the top of primary wave 5, also the top of the intermediate and minor wave 5 right here, we did something. We don't just start making an impulse down. Okay, because remember, after 5 waves you get 3. It goes 1, 2, 3, 4, 5 waves, and then 3 waves. Yeah, that's like textbook Elliott wave. They tell you get 5 waves, and then you get an ABC 3-wave retracement, right? That's the schematic. So here, our ABC looks like 1, 2, and this is our C wave. Okay, this is what this is my best read as of now. Okay, so this was our A wave, initial break of structure. We got a B wave, which was a composed flat correction. So again, an A wave here, a B wave here, and this C wave is indeed our impulse. Okay, and that's what we're counting. So some people may be curious as to why. If you look, I have the count of our 5 waves down starting here. Why? It's because up before this point, you get your A waves and your B waves, okay, which essentially are your corrective waves before this impulsive wave takes shape. So that's very important, okay? But once that takes shape, I think you get a clear wave 1, wave 2, and now, as I said, we're in wave 3, okay? So why is it likely that this count is correct? I'll tell you. Because, once again, waves of the same degree are comparable in time and in price. And this goes, it's very, very true for waves 1 and 2. Waves 1 and 2 in impulse typically are almost always the same in terms of time, time elapsed. Okay, so 1 second, I can't talk and find something clearly. Okay, here we go. So let's just take the time it took for us to get this wave 1 in. I think wave 1 ends around here, so it's approximately 12 days. Okay, and then wave 2 goes all the way here, so it's approximately 15 days. Now we're counting this on the daily time frame, so there's obviously going to be some margin for error, but I think those are comparable in time and in price, enough so that we can say this is a wave 1, this is a 3 wave 2 correction. Okay, now that's time. Let's make sure that it is it's legal, or that it fits with the data, because this is all from data, right? It fits with the data that we typically see for waves 1 and wave 2. In terms of price, you know that wave 2 comes to a minimum of the 382 Fibonacci retracement level, okay? I think you barely hit that, okay? I think you barely hit that. Now, again, this is the daily time frame. There is going to be some error where we're drawing our orthodox, the beginning and the end of these waves, okay? But you can see we just barely reached this 382 minimum retracement for wave 2. Let's go on the smaller time frames, because I don't know about that. Let's go on the smaller time frame. Let's go on a 4-hourly time frame. See if we can't see more clearly into that. So I would say, once again, that wave 1 starts here, right here. I think that is quite clear, and I think that it ends. So let's see where it ends. I want to say it ends right there, right? With that big wick. Yeah, that's pretty much where we drew it, right? I don't know about this. I didn't notice this before, but I don't like it. I don't like the fact that the 382 hasn't been hit. Is this possible that, I'm misreading this and maybe I need to pull it down here or something like that, and I've got the start and end of these waves wrong? Possibly. But I do not like that. I fundamentally do not like the fact that the 382 hasn't clearly been tagged. Because we know wave 2, minimum retracement of wave 2 is the 382. Another possibility, if this isn't it, then maybe we haven't gone into wave 2 yet. Okay, this is another possibility, because I don't like at all the fact that this didn't come up to the 382. And it leads me to believe it's more likely than not that wave 1's not yet finished. And we haven't even entered wave 2. This may very well be, I think this is more likely than not, okay? Let's revise our count then, because do you see, like, guys, it's not about, I mean, I do this, I look at the charts all the time, and I'm constantly kind of thinking about things, but I'm not trying to bend certain things to fit a narrative. I'm trying to do the analysis. If that means I'm wrong, I'm wrong. That means I need to revisit something or reconsider something, I will. And I think that makes for a powerful analysis, because then you can really hold yourself accountable, and you don't bullshit yourself, you know? I'm just looking really quickly at, I think because we just got that close, that hourly close right here. And so that cross on the bottom there. Okay. Anyway, back to the DXY. I want to say that it's more likely than not that wave 1 hasn't yet taken shape. Okay, so here's what we're going to do. I'm going to remove this. I am going to I'm thinking. Okay, here's what I like. Okay, let's go on the daily time frame. So there's two things I'm thinking about here. First, this indeed is a crucial support. This 11, 12-year support, okay? But I do not think we necessarily come all the way down here. Why? Because this wave, this primary wave, is an extended wave. When you correct from an extended wave, okay, there's data in Prechter and Frost to support this. When you correct from an extended wave, that initial break of structure typically targets wave 2 of the extension. Okay, and the extension, I mean the extended wave, which would be this primary wave 5. Okay, so it would be wave 2 of the minor degree of the lesser degree, which is basically the intermediate wave 2 of the extension, right? That's the extension. So I want to say, and I previously had a blue rectangle in this region, in this region, yeah, for that reason, because I know that, and I even quoted Prechter and Frost in a previous episode in that rule. So if you kind of don't want to take my word for it, by all means, go check. I'm sorry, I'm looking for the rectangle tool. As I've said before, it's hard for me to talk and look at the same time. Where the hell is it? It's here somewhere. No, it is here somewhere. Yes. Good guess. Okay, I want to say that this is our target. Okay, I want to say wave 2 of this trend is our intermediate target. Now, it's not going to be where we finish and then bounce up from there. I don't think so. Here's what I think is going to happen. Okay, and let me put this in. And I think this goes with what I'm looking at and what we're looking at, and why that wave count was not super accurate. I still think this is a wave A, wave B, and I think we come down to here for wave C. Okay, I still think that's in play. Okay, so let's kill the opacity on that. And what I think is going on, okay, you may have gotten this. Let's go on the 4-hourly time frame. This may have been your wave 2 right here. That may have been your wave 2. Okay, we're on the 4-hourly time frame. Let's just look and see in terms of time. And this is a zigzag of some sort, right? It's about 1 day, 20 hours, almost 2 days. And this, no. It doesn't work. It doesn't work in terms of time. This is tricky. This is definitely tricky. Okay. Here's another way. Here's another thing. This may be coming back up here. But then I still don't like it. Because in terms of time, you're doing this. You're putting in, again, almost 12 days. And then it's already taken you, if this is A and B, so the first 2 waves or two sections of a wave 2 correction, it's already taken you 16 days. I don't like it. I don't like it at all. I don't like it at all. I don't like it at all. I think the best I can do, the best count, is going to be, something like this. And this is a wave 4. This is a complex wave 4. And we're expecting wave 5. That's my absolute best right now. Let's measure that out. Let's do a few things. We're going to do a few things on that. And this is, guys, people really, really think that Elliottians, at least, good, respectable Elliottians, just draw random lines on charts willy-nilly, indiscriminately. That's completely false. If you actually trade and actually use this information for your trades to inform how you place bets on the price, then you probably lose a lot of money if you're just doing it indiscriminately. There are guidelines, there are things that have to be respected, and this is the process by which you work through. Let me just speak for myself, that I work through the best way to put these counts in, right? I'm not just putting random stuff on screen, because that doesn't help me. I don't give a damn about being correct or, being correct in the eyes of the YouTube community or, whatever, somebody on Twitter. I need proper, correct, reliable information for my trades. I need it for my trades. So that's why I do it. That's why it's painstaking. That's why I take time and effort to really make sure it's reliable and high probability. And the way you make it high probability, sorry, I'm just looking at the Bitcoin price and uh, all these other alts while I say this. The way you make it high probability is by following the guidelines, because those guidelines are guidelines to highly probable counts. So that's why we do what we do. Still looks like it's dilly-dallying. Yeah. Anyway, let's go back to the DXY. Let's keep working on this. Okay. Okay. This could work. Now, and I said in the beginning of the stream that wave 1 and 2 typically comparable in time and price. Why do I not say equal? It's because of this. You don't always see it, but it's possible. And what do I mean? Sometimes wave 2 is not a 1-to-1 in terms of time of wave 1, but it's a 1-to-1,618. Sorry, it's a 1-to-618. That's what I meant. Or sometimes it's 1-to-1,618. It's a proportion. It's a high probability proportion of wave 1. Okay, so let's look at this. Maybe that's what's going on here. Okay, if this is wave 1, 4 days, 16 hours, let's translate that into hours. So 4 days, 16 hours, so 112 hours, okay? Okay, let's, okay, so 112 hours. And then we have wave 2, which took 24, 48, 44 hours, okay? Whoops. So 44 over 112. What's the relationship? It's approximately, if I have to think of Fibonacci, it's approximately 382, right? 44 over 112. Let's just pull the calculator out real quick. It's approximately 382. This is where I really use my math. Yeah, it's closest to 382. It's 0.39. So I would say that is a proportion, right? It's not 618. It's not the 1618. It's not a phi ratio, but 382 is a proportion. And so that is, it's comparable in terms of time, in that it's a small percentage, but it's a viable percentage of the wave 1. And then it comes to a minimum of the 382. It satisfies both. Okay, but that's really a good example as to why you don't say, and I know a lot of eliticians say this, who follow this guideline or pay attention to this guideline, the time principle. This is why you shouldn't say waves 1 and 2 have to be equal in time. They typically are, but they don't always appear that way. Okay? So let's now measure this. Let's say this is correct, and wave 2 took about 38.2% of the time it took for wave 1 to form. Look, guys, this is too good. Look at this. I took wave 1, the retracement of our, wave 2, right? And where does wave 3 end? right at the phi ratio. And where is wave 3 supposed to end? Between 1618 and 2 Fibonacci extension. And this, I love this. This was messy. This was challenging. This is not something I foresaw, but I did all of this in front of you. I was wrong. I saw why I was wrong. And I reworked it in front of you. And I came to a high probability read that this is actually wave 1, 2, 3. All of this was a messy wave 4, WXY. Highly likely a WXY double 3. And now we're going into wave 5. Okay? And I did that all in front of you. And again, it's not about just putting random shit up and, hoping and praying that the price is going to do that. You study this stuff, you will find these guidelines lead you to high probability counts. So what we're likely to have here is an extended wave 5. Why? Because one, there's a couple of reasons, and I'm going to show you why. I want you to look at this, and this is where it really helps to be. It's like a puzzle. I want you to look at this. Look at this right here. Guys, are you having fun? I think this shit is fun. Instead of doing random puzzles, like crossword puzzles or something like that, you can do these kinds of puzzles and get paid. You get paid by the market for figuring out these kinds of puzzles. Very lucrative puzzles to figure out. I think this is what is happening right here. Do you guys see that? Let me put that in. You're getting a head and shoulders pattern. Okay? And remember, what is the target for your head and shoulders pattern? Like, I hope you guys see that. I'm not really... It's not just like, oh, I'm making it up. Like, it's very clear. Head and shoulders pattern, isn't it? The target, the technical target for these patterns, simply the height of the head superimposed from the side of breakout. Boom. That gives you a target right around where we expect, right? A little further, we expect it to hit around wave 2, right? This is around wave 2 of the impulse. So this is confluent with what we're looking at. And this is why it's likely that we get an extended wave 5. Okay, a wave 5 extension all the way down here. Okay, that would satisfy our Elliott wave count. One, it would also satisfy the principle or guideline, not principle, but guideline that the wave A, so all this is wave A. 1, 2, 3. The initial break of structure of an extended wave targets wave 2 of the lesser degree. So wave 2 of the lesser degree is the intermediate, so this parenthetical, wave 2. Do you guys see? This is advanced shit. If you're lost because you don't have a good handle on Elliott Wave, don't feel bad. This is advanced stuff. But this is the level of precision that you can get when you really, really work these wave sequences, these patterns, these, you learn your basics and then you apply it assiduously and you really work at it. I think that this is a high probability read. Does this mean this is going to happen? No, I don't know, but it's likely to happen. I would not be surprised if it happened, just as I'm not surprised that this happened as we plotted it. This was not plotted after the fact. If you follow my work, you know that we put this in way before the fact. We put this wave count in way before the fact for the DXY, okay? And that's exactly what happened. And thus far, we've rejected exactly as we read it. Even still, we were still not able to predict exactly what Bitcoin and crypto was going to do, because remember, the relationship of the DXY and Bitcoin is a monthly inverse relationship. So within that month, you can have some deviation. The DXY is going down, but Bitcoin decides to go sideways, then up, and then down. Or, down, then up. So even though your reads, and that's something I learned kind of the hard way later on in my career, even though you can make the best reads, trading's another thing. You still have to practice really good risk management, because there's still a bunch of unknown factors, right? How you're going to get exactly to those targets. Young Dasa says, what's up, Dean? How's it going? Can you check out Zcash? I want to hear your thoughts on the price action recently. Yeah, let's add Zcash to the watch list. Actually, we already have Zcash. Let's just remember to look at it. So we're going to look at Zcash in a bit after we go through the main watch list. But yeah, Young Dasa, I've been well. So yeah, that's my updated Elliott Wave count on the DXY. My targets are down here. Specifically, if I had to be really specific, my target to the downside is 96. Okay, 96. So it's even a little below right here, but yeah, I'm short the DXY for this reason. Okay, and let's move this out of the way a little bit. So yeah, so that's what I think's going on. And given this, when we say DXY is dumping, it has been dumping, right? It has been in a downtrend, but this is when the real impulsive price action starts, where we really get, down. We found some really strong downwards price action here, filling this gap, and I think this is a gap. When you talk about charts and imbalance, you went up here and you created this uptrend against all odds, and it's pretty much there's another reason. This was an unchecked, or it was a rise where there was no kind of correction. It just went straight up, right? It went straight up, and it went straight up in a wedge formation. Okay, and what do we know about rising wedges? They usually correct down to the place of origin, which is right there. So that's the other reason this is a likely target. Again, all about confluence. You find confluence. So our wave target, or our Elliott Wave count, takes us down here. Our pattern analysis of this head and shoulders takes us down here. The idea that this is a rising wedge, a massive rising wedge that breaks down to the point of origin, takes us down here. And I think when it's all said and done, once you get down here, you're going to put in some sideways price action. You're going to absorb all of this, all of this supply, right? And in that pivot back up, you're going to use this bottom 11-year, 12-year support line as support for the price. So the price is going to hang out. The DXY is going to draw down, what I think is likely to happen. DXY is going to draw down significantly, and it's going to AB base. It's going to go sideways for a bit, using this as support for the launch pad. As it goes back up, then we experience the next bear market in Bitcoin. But this is the next bull market right here. That's getting ready to go. Okay? And you would have thought that the bull market would have already started, given that we've already come into impulse, but yeah, who knows? I'm just, I'm reading. I'm actually in disbelief that we haven't gone up more, given what I'm reading on the DXY. But again, remember, this is a month-to-month relationship. And if we look at the monthly, let's look at the monthly really quickly. And this is last, we'll have. So we've put in 2 straight months now, 2 straight red months on the DXY. Okay, so if you want to look month to month, 1, 2 red months, we started a 3rd red month, we should have 2 green months in Bitcoin. And do we? Let's see. Let's look at Bitcoin real quick on the monthly. Yeah, see, this is where I think Bitcoin has a lot of catching up to do, and it's likely that when we do start running, it's going to catch up quite violently. Because look, if the DXY, we saw this chart, right? So inversely proportional, right? DXY is up, Bitcoin's down, DXY is down, Bitcoin's up. Okay. The past 2 months in the DXY, past 2 months, and now for a 3rd month that just started, we've been down. Okay, so 2 straight red months. One was kind of like a doji candle. It's kind of like indecisive, up and down. But this was a proper red month. November was as red as you can get, right, for the DXY. Yet, Bitcoin also printed a red candle, a red monthly candle in November. That is interesting. That's not something you expect, right? So this is something I think, people really need to be careful shorting, but, to each their own. But if you're looking at the data saying we're so oversold, it's so likely that we go up. Okay, and as you can see, this is the monthly time frame, not the daily, weekly, 15-minute. You usually see small time frames kind of do something like this. But on the monthly, we've pretty much been oversold for the entire year. As you can look at this. This is what the momentum indicators are saying. Since January, let's say since February of 2022, we've been scraping the bottom of the barrel on the momentum indicator for Bitcoin. Since February. So this actually means that there's monthly bullish divergence. Right? You guys understand that? So if since February we've been going down in price, but on the momentum indicator since February we'd already exhibited a flat sort of momentum in the oversold territory. That means we've been bullishly divergent. Actually, it shows January, February. We've been bullishly divergent on the monthly time frame for Bitcoin since the beginning of the year. Again, this is not an opinion. This is just what the charts and the indicators are telling us, okay? So that is interesting. This is why, I think it is prudent. It's wise and prudent to position yourselves long, protect against downside, but position yourselves long because it's a matter of time. It's not if, it's when. And when it does happen, it's going to be relentless. It's going to be absolutely relentless. Okay? Okay, so that was the DXY. I hope that made sense. I got a lot from that because, again, I do this presentation, I share my analysis, and I really get a lot out of it because most of the times I get on here and I do things that I didn't expect. And I come to conclusions and I have insights that I didn't expect. I did not expect this count. I had a different count that I worked out before the show. And then during the show, I'm like, that's wrong. And I did it all with you. I sat through and did it all with you, worked through it. And I really am very comfortable, more confident and comfortable in this particular account right here for the reasons I stated. And that kind of makes me happy, and that's kind of what keeps me going, to be honest. Doing this analysis, because it's not because I get paid. I don't have a Patreon. YouTube doesn't pay me. It's just because, I like to share, and I do get benefit from it. Now let's. We already looked at Bitcoin. Let's look at it on a smaller time frame. Not exactly sure what this is. I mean, I'm assuming it's some sort of consolidation reversal channel, right? I'm assuming that's the case. Okay, let's yeah, I'm assuming that's the case throughout the market. That this is some sort of consolidation reversal channel that we've been putting in. Yeah, that's what it looks like, right? That's what it looks like, right? You have your initial break of structure right here. You have your counter. Not exactly sure how to count this. Is this your B wave? I don't know. But it does look like, it doesn't look like an intra wave correction. That's all I'm saying. Okay, on RSR it looks very clear. Like this is A, B, perhaps, yeah? So that's just the small time frame outlook. And meanwhile, the DXY on the higher and smaller time frames is going down. So this is going up, but the question is when. The DXY has been going down considerably today. I don't know if people have been paying attention. The DXY has been dumping, like absolutely dumping. Like look at this. This is all today. Look at the daily. Like look at the daily candle so far for the DXY, right? This was yesterday. This is great if you're a bull in crypto. This is absolutely great. This is what you want to see. But very little reaction. Right? Again, this is not something, you don't get an immediate response always from one asset, the underlying asset, DXY, the dollar, doing one thing or another. But I think it's just kind of what you should expect the trend to be able to do. It's kind of like setting the scene or the foundational potential for what may be in the crypto markets. The DXY is going up. It's unlikely that you're going to get, a positive move in the aggregate. But if it's going down, it's like a question of, okay, you're eventually going to go up. It's a question of when. Yeah. Yeah, I don't know. Okay, we're going to zoom out. Let me just look at the Zcash. It's here somewhere. I know it's like yellow. Yeah, there it is. Okay, that's a very clear 5-wave sequence, right? I think that's an easy read. As easy as they come. Very few things are this simple. I mean, that just jumps out at you, right? It may not be finished. You may be putting in. Let's see. Actually, before I say that, let's just measure it really quickly. Because if we got an extended wave 3, it may very likely be finished. Okay, we got an extended wave 3. So, unlikely that you get an extended wave 5. I think that's it. Okay, and you're printing some bearish divergence. So this is coming down a bit. So this was 5 waves up. You're gonna put something like this. It's likely to take, again, likely, it doesn't have to take exactly the same amount of time as the 5 waves up, but it's likely to take approximately the same amount of time as it took to come up to go down. Where is that tool again? Here it is. No. Damn it. Here, let's just use a ruler. Okay. So that's 32 hours. That's, 32 hours up. I would say 32 hours down. So I expect, you not to be able to move up again until Saturday. But again, this is something like this. Something like this. Okay, there we go. Sorry. Let's turn the lines on there. Something like that. Right? Maybe a little deeper. Maybe a little deeper. Yeah, that's what I expect. But essentially what this is let's see. Yeah, that's what it is, I think. And eventually, the big bad resistance for Zcash is this. That's its bear market resistance right there. So eventually you want to, I think, Saturday, early in the morning, Eastern Standard Time, you're going to be able to put something like this in. That's what you're waiting for. So that's what I would expect Zcash to do. Yeah. I guess if you measure this, and B. Yep. Something like that. Between 1618 and the 2, you come down. So basically, that breaks the bear market lows. And it's not that, I mean, I don't think that many assets have broken this bear market resistance. We know Litecoin has, but other than Litecoin and maybe Dogecoin, I think Dogecoin, not that many things have, right? Yeah, Dogecoin has, but not that many things have. All right, let's go. Looks like we're getting some action here. All right. Okay, what was this? Okay, it looks to me, and I could be wrong, but it looks to me like this region right here, if you look at this region, it is some sort of consolidation reversal region. Okay, our momentum indicators are telling us that that's a bottom, a local bottom, and the way it's structured, it looks like it's a bottom. Okay, and again, if just because you make a lower low doesn't necessarily mean you're breaking structure and you're creating a an impulsive wave down. This looks to me like part of the same contiguous consolidation reversal pattern. I think it's the consolidation reversal pattern for this drawdown right here. That's what it looks like to me, and that's what it looks like in other assets, right? If you look, you can see. Obviously, they're showing a little more strength, but you can see that rounded bottom here. They're showing a little more strength than Bitcoin, which you would expect in a bull market. Altcoins are going to outperform Bitcoin in a bull market. So if these are in a bull market, if they're in an impulse, then yeah, that's something you should expect. Let's see. Yeah. Well, looks like it to me. Yep. Yeah. Yeah. I mean, look, this looks like it, right? It's pretty consistent. Especially here, right? You get three waves, and then your 5-wave move. This looks like it's finished. And then A wave, targeted wave 4 of the previous trend. B, maybe this is first degree B wave or second degree B wave. I don't know, but it looks like a consolidation reversal pattern on a small time frame. That's what it looks like to me. Does not look like a wave 4. Okay. And again, the DXY is going to hell. It's like, of all times, now you should be pumping, right? Let's see. Yeah, Bitcoin should be pumping to all hell, because the DXY has been puking. I mean, this is impulsive price action right here. You know? The DXY has been going down legitimately. Not just like sideways. It's been straight up going down. Um, yeah, I'm expecting a big move. Big green candles. Actually surprised that we haven't experienced them yet. I'm expecting big green candles. Alright, let's look and see. I'm going to wait a little bit on stream with you all. Wait and see what this does. I'm just going to measure this. I'm curious. Yeah, it looks to me, if I had to count this, I'd count it like this. And this running flat ABC is my wave 4. So I think we got another wave. Another wave up. And it could be extended because wave 3 was normal. And I do expect it to be extended and rather sizable. You know, if I had to measure, I would say something like, let's see. Yeah, around 18. Yeah, around here somewhere. Would not be surprised. Or even up to the 20 region. You know, I do expect this to be a sizable move. I do expect this to be a sizable move out of this area right here. Would not surprise me. I'm actually surprised that, you know, it hasn't happened yet. Alright. You see Bitcoin dominance starting to come down, but you know, showing some bearish divergence on the 4-hourly time frame. Obviously, it's not going to move until alts do their thing and pump. The market's always right, but it's so odd. I have to admit, it's so odd that this move hasn't happened yet. especially given what we're seeing in the DXY. Okay. All right, just wait a little bit and see if it materializes. I really would be surprised if we didn't see it like now, because everything on the charts is saying this is the move, and here's when we get it. Plus, so many people are short. They're short 10,000. They're short Bitcoin to 10,000, sub 10,000. There's so many people that are likely to be squeezed with such a move. I mean, it's perfect. It's perfect that the market does that. Because the market always, I don't know, it doesn't always do that, but a lot of times it does catch a lot of people off sides in these kinds of moves at these bottoms. Okay, I'm gonna take a quick bathroom break. I'll be right back. All right, I'm back. Let's see. Any changes? Okay. Looks like we have a new little bit of green, but not a lot of it, just a little bit. Yeah, it's assets like this, like synthetics, that really encourage this outlook of this being continuation, right? You come up in some sort of, actually, you know what? You could say that you started down here. After this B wave, you broke this. Yeah, you started over here. Okay, you started being impulsive, and you come up. You put in maybe some sort of semblance of an impulse for about a day and 5 hours, and you're continuing. It doesn't look like it's over. It looks like it's still printing right here. This looks like it's still printing. And this looks like a picture perfect falling wedge that is very likely to break to the upside. This just looks like a bull flag, right? Like picture perfect bull flag. And put it right here. Yeah, that looks really nice. You're just, printing all these bull flags. So this should likely continue. So yeah, that's what we're waiting for. Yeah, you got your bull flag here going as well in Algorand. Not so in Binance Coin, but it's still bullish. XRP is bullish as well. I mean, everything's really bullish. You've been holding. It's not like we're dumping, okay? It's just we've been holding this level for almost 2 days straight, right? Just going up and down in this level. For me, that is, a sure sign. Well, not a sure sign. Nothing's a sure sign, but it's a high sign. It's a probable sign that you're going to continue the trend. And the trend was up. You come up, and then you go sideways for a bit. You're likely to continue the trend. So yeah, that's what we're waiting for. Same. Trend established, sideways price action, trend resumes. That's it. If you want to keep it real simple, you don't have to get into what exactly this is. Obviously, you can. It's not impossible to figure out, but if you want to keep it stupid simple, the analysis is that. And for me, on a small time frame, Bless, bless me. On a small time frame, this is my bull flag right here. Boom, boom, boom. And then for more continuation. Question is, what moves first? DXY is not looking promising for continuation to the upside. You know, it doesn't look like it's found support here, despite where the momentum indicator is, only because you don't see a strong reaction at these levels, indicating some sort of initial break of structure. Yeah. But it's not like DXY hasn't dumped considerably, so kind of perplexed as to why we haven't seen a stronger move up in crypto. Because it's not like you haven't seen that in the regular stock market, right? The regular stock market has responded to the DXY dumping for the past 2 months. It's gone up quite a lot for the stock market, okay? Not for crypto, but for the stock market. That is a considerable move. Alright, I'm just going to stay a little longer, see if this doesn't break out on stream. If not, we're going to call it. I am very, very interested in seeing big green candles. I think it's way past due. Way past due. Way past due. Who's gonna break out first? That's the question. Who is going to break out first? Will it be Bitcoin? I don't think so. Just because going into a bull market is most likely going to be an altcoin. Is it going to be Polkadot? Is it going to be Cardano? Is it going to be Reserve Rights? Dodo? Ethereum? Usually Ethereum. It's like the leader of the altcoins, you know? Doge, Litecoin. Put my money on Litecoin or Synthetics. Synthetics has been looking quite bullish. I put my money on Synthetics. Just looking at the change in percentages, I would put my money on Synthetics, right? That looks to be the most bullish, followed by Zilliqa, and probably Cardano. Let's see if that plays out. Let's give it a few minutes. Let's give it a few minutes. Give it a few minutes. Let's see outside of our watch list if anything is moving. Okay, well, Band Protocol seems to have gotten the message. DYP, I guess. Dash. There's a few assets. Not many, you know? Zcash has gotten the message, right? Since Monday that, you know, the DXY was dumping. That's good. Kadena. No, not so bad. I think it's just a waiting game. I think we're essentially holding these levels and doing our consolidation reversals, and it's just a waiting game as to when we move. This is one of the most challenging aspects of trading, waiting for the move. Alright, I want to stay on until we see some green. I want to see some green in the market. I'm tired of seeing red. I'm gonna go to bed seeing green. I'm gonna wake up seeing green. I'm really tired of seeing red. Half of my positions are in the red, which is not the worst thing in the world, you know. As long as they're alive, they're viable, I'm still in the game. But I much prefer to see these positions in the green. Come on. Many a trader has waited for breakouts and, you know, breakouts that never came. I'm waiting for this breakout. Interestingly enough, just back on the DXY, given what the DXY has already done and how Bitcoin hasn't really reacted to that, it's perplexing. Is Bitcoin then just going to keep going up uninterrupted? Is it going to just shoot up and meet its probable targets at a speed that we can't even fathom, given that most of this impulse is finished, right? Most of this impulse is finished. So is it just going to go down and then Bitcoin goes up by a lot? And then while it's consolidating, perhaps Bitcoin continues to go up? Maybe. Maybe that's it. I don't know. We'll see. We'll see. Don't know. Don't know. But goodness, we've been hanging out at the bottom of the market for so long. All of this crypto is undervalued. Way undervalued. Way undervalued. Especially considering, you know, where fiat currency is and what it's doing and all the utility of these assets. Alright, I'm going to wait 10 more minutes and see if we don't get a reaction. If not, we're going to call it a stream. The other point I want to point out is that the 4-hourly stochastic RSI is starting to reset to the downside. And for something like that to reset to the downside without any major downwards move is a big deal. Like, we pretty much just hung out in this area, and already you can see this is resetting, which is really bullish. Same with DOT. You can see the reset is even more pronounced right here. With Cardano, you're coming back down to not oversold territory, but almost. With reserve rights, you're completely oversold on the 4-hour. Same with Dodo. Ethereum's almost there. ZIL, you're still overbought, but Dogecoin, completely oversold on the 4-hourly. Litecoin. Synthetics, you seem to be hitting a support here on this stochastic RSI, which is important. Even more important sometimes than coming down to these levels. Algorand, oversold. BNB, completely oversold. XRP, completely oversold. That's interesting. It's very interesting. It's quite bullish too. Let's go on an even smaller time frame, figure out what the hell is going on here. Yeah. I don't know. Give it a few more minutes. Give it a few more minutes. I mean, the DXY is just doing everything we want it to do. It is showing all kinds of weakness. And yet Bitcoin is like, I guess I'm strong insofar as I'm not dumping. That's not what we want to see, though. It's like it's stuck. It's been stuck at this level for a few days now. No, for 2 days. Yeah, we've pretty much been stuck at the same level for 2 days. Same point of control, boom, boom, boom. This level for 2 days. Well, you know what they say, good trading is boring. It's like sitting and waiting for stuff to happen, waiting for your moves to take place, but you know, if it's too exciting, you're not doing it right. You're way over leveraged and you're playing small, you know, time frames that are way too small. Alright. I do think this is going to happen soon. Let's give it a few 15-minute candles. I got nothing else to do. This is my full-time gig, so I'm gonna be doing this anyway. Might as well do it on stream. You know what? And the DXY looks like it's showing even more weakness, which is awesome. Love it. Love it. It's like watching paint dry. Fucking hell. Oh man. I think this is what really gets people to say, you know, I'm not doing this. Yeah, I just don't. Who has the patience for this? You gotta be really special. You gotta be different to be able to wait these markets out. I really like what we're seeing in the DXY on the smaller time frames, by the way. I love how weak this is looking. It's just bleeding. You know? I love that. It looks like it's just losing this level right here. Slowly but surely. It really looks weak. This shit I love to see. Who's going to respond first? Who is going to Respond first. Who's going to pump first? Show some strength. I can't wait until this new fucking price action, bullish price action comes back. This is so boring. I want it to move and pump and move and pump like the good old days. Oh my god. We will be so deserving of it. Anybody that's still in the space will be so deserving of it. It's not even funny. Torturous. Absolutely torturous. Oh man. Alright, let's give it 5 more minutes. If not, then yeah, let's give it until 5. We'll give it until 5. It's 4:49 where I'm at. So 11 more minutes. 11 more minutes. Let's see. Let's see. Come on, Bitcoin. Come on, Cardano. Come on, everything. Let's fucking go. I am bored. I want to see action to the upside. I do not want to see action to the downside. That is not fun. It is not at all fun. I hate it. The worst is when these consolidation reversal ranges, or what you think are consolidation reversal ranges, are intra-wave corrections, wave 4 corrections, and then there's another leg. That is so weak. I hate it. Fucking hate it. But it really doesn't look that way. But I hate when I misread that. Absolutely hate it. Doesn't look that way though in this case. You know? Just looking down across the board. Doesn't look that way. Doesn't look that way. We're gonna have a peek at the total crypto market cap. Oh yes. Love to see it. Look at this. It's subtle, but I know, we should all know, just having experienced this bear market, we should all know what weak price action looks like. We should all know what, a weak market looks like. This looks like a weak market, like a downtrending market. Like, whatever this is, it's hanging on for dear life and it's going to dump. That's what it looks like. That's why I love it. Absolutely love it. It's about damn time. So many days spent watching this chart, this DXY gain strength. Oh man. Every consolidation, it's like, oh, I'm not done, by the way. I'm not done, by the way. I'm going up. Now it's just dying slowly. Good for it. Good for us, I should say, right? Except for people who are short, yeah. Yeah, let's look at the total market. Total crypto cap. Let's look at that. Classical music is so freaking relaxing. It's crazy. Where is this total cap? Here it is. Okay. Okay, that's what I see. So I think the entire cryptocurrency market has put in at this level 1 degree, call this A, call this B, 2 degrees. I think you have another leg up of AB basing. I think these are the 2 degrees of AB basing. And this right here is your impulse. That is the beginning of the bull market, I believe. I think that's it. That's what it looks like. The other thing that the entire crypto market cap has produced is a beautiful, let's put this in properly, a beautiful inverse head and shoulders. What the hell is going on here? Okay, sorry. Let me try that again. That was a fail. Something like this, right? So I think this wave 4, is kind of like a retest of this. And let's go on a smaller time frame and see if we can't suss out this impulse. But I guess this wave 4 is a retest of this inverse head and shoulders. And naturally, the minimum target would be when it actually does decide to break out, the target would be up here somewhere, at least. At least. Okay. So let us go into, let's just go back to looking at this as 2 degrees of AB basing. Whoops. And looking at this right here as our impulse. If this is our impulse, I think it starts right here. I think it starts right here. This goes to wave 2. Wave 3 is the same size as wave 4, which is great because that sets us up for an extended wave 5, which we need. Oh man, we need it. But yeah, just measuring it out. This is why it's smart to be long now, on the medium time frame and the high time frame, to be honest. It looks something like this. Yeah, so wave 1, 2, 3 came out short, basically. Or you can say that wave 3 ended here. Okay, and this is a 1, 2, 3, 4, 5. This is wave 3 right there. That's another very viable, sensical read. I like that even better. Let's put the lines up here. I like that even better, which makes this wave 4 WXY a double 3 zigzag. A double 3 zigzag, a WXY zigzag. I like that. I like that a lot. I like that a lot. And still, you have, so yeah, if you measure it, you can see very clearly. Wave 3 comes between the 1618 and the 2 Fibonacci extension. Wave 4 comes, let's see, wave 4 probably retraces regularly between 236 and the 382 of wave 3. Probably do get that. Let's see. Yeah, you just about get that, right? Between the 236 and the 382. Now wave 4 goes into wave 5, which should be, like we said, at minimum up here, but it could be even higher. I like that. I like that, especially given what the DXY is doing right now, which is just dying slowly. Anyway, yeah, I like that. I like that read. I like that read. I like that read. I like that read a lot. Yeah, that's essentially the same read I had on Bitcoin. Except the wave 4 looks a little different, right? Wave 4 here is composed, running flat. So, yeah. No different. I think it's a little different. I got this position. Let's see. What's it look like? I like this. I like this. I like this. Hiding my stops here. Yeah, I'm comfortable. Alright, it's 5 o'clock. No fireworks as of yet. I'm gonna call it a stream. Guys, it's been real. Let's hope we get some fireworks. Big green candles. We deserve it. We're waiting for it. The charts show that we should get it. And yeah, that's pretty much it. I will see you tomorrow for the live stream. Take care. Bye.